And we're back. Again, I'm Leslie DeLuca of DeLuca Real Estate with Jessica Aubuchon, Senior Loan Advisor of Riviera Financial. Jessica is a licensed California broker. I said she may look young, but she's been in the real estate business for 22 years, brings a wealth of experience and knowledge to her clients and to us about mortgage lending. The other thing I wanted to also mention that I didn't is if you're in the Monterey Peninsula or anywhere in California, Jessica can help you anywhere in California. She's very familiar with the Los Angeles market as well, and maintains a residence there as well as Monterey. And if you don't have an agent anywhere in California, I'm also connected with some of the top agents all over the state and all over the country. So I'd be happy to refer you to some really great agents, and Jessica can help you get a loan. So, again, we had some technical difficulties, but today we want to talk about how to take the scary out of home loans. And, buying a home can be overwhelming, even if you've done it before. Doing it without the help of a skilled real estate professional, skilled lender, can just take the fun out of it, because it should be a really exciting time for you. And I know people have lots of questions. I have some questions here that people have posted and asked me over the past few days. Some of them I don't have answers to, and that's why I get people like Jessica to come and help. And if you have questions as we go through this, please post them, because I can see them, and even if I come up there to try to read them, I'll have Jessica answer them. So the first question is, Jessica, people ask me this: where do I start? I want to get a home loan. I don't know the first thing about it. What do you need from me?
Conversation. We need to have a conversation.
You don't need this much paper?
No. And some people actually don't want to speak over the phone. That's fine. We can email, we can text. And I just need to kind of get an idea of what your goals are and what your situation is currently. Pre-qualification is very simple. It's just about a 10-15 minute process. That gives people an idea of, what can I do? They might have no idea. And like I said before, nobody wants to be denied for a loan. So I think that's where a lot of people are like, I don't even think I can. Yeah, and they don't want bad news. So we can kind of talk about what their options are, and it's not really a big deal. If they want a formal pre-approval, which is where you would get a pre-approval letter to take with you to make an offer on a house, you're pretty much 99% you're getting a loan. Go start shopping. That takes a little bit more effort. And I try to make it as easy as possible. Depending on your situation, if you're just a W-2 employee, you don't own any other properties, it may only be like 4 or 5 things I would need from you. Yeah.
So let me ask you this. So because of your experience, if I called you for a home loan, are there certain questions you can ask me without even pulling my credit or anything to know if I even can qualify?
Yeah. We were just talking about how a lot of people want to fix their credit, or they feel like their credit isn't in the best place. You might find that it's perfectly okay the way it is. The lending guidelines for certain programs are very lenient when it comes to credit. So you might not need to do anything with your credit. What I suggest is, if people want to find out about what's on their credit report, go to annualcreditreport.com. You can pull your credit report for free. There's no ding to your credit at all. It's a government ruled thing. So this is the site, and there's actually ones like free, annualcreditreport.com. Those usually aren't free. So it's misleading. The one that's annualcreditreport.com. That's the one that you can get your information, and some things on there might look bad, but it might not be. And I would be happy to look it over. I had a lady call me last week, and she's like, I'm really trying to fix my credit. And I said, well, do you know what that means? Do you know how to do that? And she's like, well, no, I just kind of thought that's something I should do before I start the process. And I said, well, go get your credit report, send it to me. And it was actually not that bad. She had one thing on there that was a really old derogatory credit line, or it was she bought a laptop, so it was an installment one, and it actually was about to fall off the credit report within the year.
And that's the other question too: is how far back do they look?
It depends on the derogatory item. Some are longer than others. It's like a big thing, but usually, general rule of thumb is 7 years. They are talking about changing the way they look at like medical collections and not weighting them as much, because that's not something somebody went out and deliberately purchased and was irresponsible and didn't pay back. It was something completely out of their control. So the way to look at medical collections is a little bit different than regular collections and judgments. So each is a little bit different. That's why I say, let me take a look at it and let you know. In this lady's case, she's probably going to start looking in about a year. So I'm like, hey, good. Maybe get a couple more trade lines, keep paying everything that you have on time. But she thought she was like doomed, that she wouldn't be able to qualify ever. And she went. It wasn't bad. It really wasn't bad. Yeah.
So the answer is this: don't try to fix your credit on your own. Let the lender look at it, because you know the guidelines, and you might be okay. You might not be as bad as you think.
Or you might think common sense says to do something nice, like maybe pay off a debt or something, but it's going to fall off your credit report in 2 months, and if you pay it, it might start that process. It'll stay on there for another 7 years. So there are some things that intuitively you might go, oh, that'd be a good thing to do, but as far as lending goes, it might not be.
Okay. And somebody asked me this: so where do I start? And then they said, is it best for me to start with my bank? Where do I start?
No. No, that's probably the worst thing you could do. I usually tell anybody that calls me, one, you want to work with somebody that you like working with, that you trust, that's going to call you back. I hear from so many people that have gone to banks like, I'm supposed to sign on Monday, and my lender said I needed XYZ on Friday, and I'm calling them back after 5 or on the weekend, and they're unavailable. Because it's, at Wells Fargo or, they're at one of the banks. And they're not available. They're just not going to be available. So so they're freaking out, calling me, wanting to know what the answer is to the question. And so I tell people, even if you don't want to work with me, even if I'm not the right fit for you, go with a broker. Because there are 2 parts to the approval process. The pre-approval starts with the borrower. They could be the perfect borrower in the world. The second part of the approval process is the property. The lender could have a problem with the property. There have been some circumstances where a lender is not going to lend on a particular property. If that person was with one bank, and that happens during the middle of your escrow period where there are deadlines and you've already spent money on your appraisal and your inspections, you would have to go to another bank, fill out another application, pull another credit report, get it. Yeah, you'd have to start all over, and you might not have that time. So if you were with a broker, somebody that has your entire package, can easily switch to another bank if, God forbid, something did happen during the process. And it allows the broker to do the rate shopping for you.
Oh.
So we were talking about this earlier.
Yeah.
It is nearly impossible for one person to shop a rate at the very exact moment to see which bank is better.
Because rates change all day long.
Yeah, it's like the stock market.
Right.
It's not as volatile. It doesn't change as much, but they change every day, or sometimes multiple times a day. So I can shop all the lenders at the same moment to see all I have about 20 different lenders that I can go to.
And you have it all on one.
Yeah, so I can shop them all at the same time to see who's better than another. And then also make sure that the client is going to qualify with that bank. So I'm doing, 2 things there. Now, when we're ready to lock in the loan, the best price lender on the day we checked originally might not be the best price lender when we go to lock. So, okay, bank B is better now, let's go to them. So it's allowing the borrower to be a little bit more savvy if they're working with a broker who really does that for them.
So you have how many loan programs? You have a lot.
Hundreds. Yeah, hundreds.
Yeah, Riviera has a really great.
Yeah, well, we're of course we're looking out for the client's best interest, but we also work with a lot of real estate agents, and so in order to be competitive with the real estate agents, you need to be able to offer as many different programs as possible, because when a real estate agent sends me a client, they want me to get it done. They want to get it done so that way they can sell a house.
And everybody's different. I mean, I have some people who put 20% down and have 800 credit scores, and then I have my people who have 3.5% down and maybe a 600 credit score. And speak about that. So that's another thing. This is interesting too. Somebody asked me, how much money do I have to make to buy a house? Because a lot of people think, oh, I don't make enough money. I got an email from somebody last week who said, thank you so much, you've been so helpful, we just can't do it. And you'll be surprised that how much money do you have to make to buy a house on the Monterey Peninsula, and how much down payment do people have to have?
So theoretically, you can get into a home with no money out of your own pocket.
No money out of your own pocket.
Out of your own pocket. Now, unless you're a veteran, there's a couple programs where there's 100% financing or 0% down. But for the majority of people, usually it's 3.5% down that they're going to need. But it can be a gift.
Oh.
So it doesn't necessarily have to be their own money. The closing costs, there's two types of closing costs. One are non-recurring and the other one are recurring closing costs. So recurring closing costs are going to be property taxes. Those are going to recur. They're going to be ongoing once you buy the house. Interest is another one. So those are things that are going to be ongoing, but there is an upfront portion that you're going to have to pay. And then also the non-recurring closing costs, which are escrow, title, they have to get paid. The appraisal has to be paid for. The notary, when you sign your loan docs, they have to be notarized. So there's some non-recurring closing costs. Now, those can be paid for either by credit from the lender or the seller, for example. So if those are paid for, and that happens a lot, it's not an uncommon thing, if those are paid for and the down payment is a gift, then the actual borrower doesn't need any money. And with FHA, you actually don't even need any reserves after the loan is closed. And that's money in the bank.
Wow.
So you could go in with nothing and get a house.
So what I do, this is for my other real estate friends out there, if you're watching, what I do when I have a client, when I know who their lender is, I want to write an offer, I would call Jessica and say, Jessica, we want to write an offer on this property for this much money. This is how we want to structure it. Will that work with your loan? And then we're really a team, and we all work together.
Yeah.
Because that way, I'm writing an offer that I know you can close.
Yeah, and if there's ever, because I do have so many different lenders, even when I speak with a rep at one lender, right, that one rep, all they need to know is their lender's products. Even sometimes they're like, well, let me check with the underwriter. So if there's something that I'm not sure about, I'm going to find out before the client is in escrow, before they've paid for all of those things that they have to pay for up front, like the appraisal and the inspections. And I don't want to get anybody's hopes up. They're going to buy a house and then later on find out that that they don't qualify.
And that's why I like to talk to the lender before I write the offer, because I never want anybody to have an offer accepted, spend money on appraisals and inspections, and then only to find the underwriter says, they can't buy this house.
Yeah.
That's awful.
Yeah, and there is a fine line between, I want to make this process as user-friendly and exciting and fun, but there is a little bit of paperwork that's involved because I don't want to give somebody bad news in the middle of an escrow.
That's why you want to do it all up front.
Exactly.
And that's why I said you have questions that you can ask them without any paperwork that's going to help you to determine if it's even worth doing the paperwork.
Exactly, yeah. So somebody, and like I said, it could be just a phone call or email or even text message. You know, like, this is my situation, and then I can go, and you'd be surprised. So many people feel like they can't, and they can. They totally can. And I hear that a lot. I have a lot of clients are like, oh my gosh, I didn't even think that this was possible, and now I'm a homeowner. So.
I want to tell you, there's a link. Actually, this is probably the third time we've tried this today because we had some internet problems. But I'll put the link, and there's a link that you can click on that will take you to Jessica's information, and you can send her an email or call her just to get some information on whether or not you can get a home loan, and she's happy to answer any questions for you as well. And
I was going to say, I put together some numbers.
This is really fascinating.
Just because a lot of people think like, oh gosh, the Monarch Peninsula is so expensive, I'm never going to be able to afford a house. So, assuming you don't have any other debts, that's the
that's the other thing. The LTV. I mean debt to income.
Yeah. So the lender wants to make sure that you can afford the payments after they give you the loan. That's not unreasonable. So, assuming that somebody doesn't have any other debt, I just put together some numbers for a $500,000 house with 3.5% down, and again, that could be a gift, and then the other closing costs can be paid for theoretically with credits. So very, very little money to get in. Assuming that there are two borrowers, for a $500,000 house, you would need to make about $22.62 an hour.
I mean, come on, that's pretty doable. And $500,000 house here means you could buy a condo, you could buy in Seaside, you could buy in parts of Marina, you could buy in South Salinas. So it's very doable if everything fits.
And a $400,000 house is about $18.21.
Wow.
Assuming 40 hours.
And what would the down payment be? So how much money do they have to save?
So that would be either as a gift or if it's their own money. On a $500,000 house, the down payment is $17,500. A $400,000 house is $14,000. Now, assuming they have a little more down that they've saved or what have you, I did a just quick calculation on a $800,000 house,
which is pretty. That's
gonna
get you a lot more.
Yeah, you'll have more options. That would be two people making about $28.50 an hour,
which is still in this town. That's very doable.
Yeah.
And how much? What?
That was $160,000.
$160,000 saved.
That's assuming that was a 20% down, like a more traditional loan.
And then their debt is about 31%. You say?
The debt to income. Usually I do about 43. 43%. Some lenders will go higher.
But you don't want to overstretch yourself.
Yeah, to be conservative. And actually, when I do a pre-approval, I do two things. I will do the max the person can qualify for. I'll figure out what that is. And then I'll also ask you what your budget is. So if your budget is, and a lot of times it's less than what they can qualify for, surprisingly. People are like, I don't want to spend more than $3,500, or only, So then I'll back into that and tell them what that equals to in purchase price. So they have a range. You could, to be in your budget, you're at this price, but you can also go to, say $100,000 more if you wanted.
Right, and that's what I always tell people, because people come to me a lot of times, they say, we want to buy this house for $500,000, and I ask them, how did you get to that number? They don't really know. Mm-hmm. So I always tell them to work backwards because how much you make. You know how much you can afford to pay a month. Mm-hmm. So work backwards. And then as a homeowner, you can probably afford a little more because there's
potentially some tax benefits.
Right, which you can talk to your CPA about. But
we can't technically
say. We can't tell you. But as a homeowner, there's different tax benefits that your CPA can tell you about that make a difference too.
Well, and I guess to give a plug to my mother, she's a financial planner and a certified certified financial planner and a certified tax preparer. Anyway, so she and I don't know if I want to say this.
You can say her name.
No, well, her name's Kim Opshan. No, what I'm saying is she might get mad at me if I say this because I don't want to completely overwhelm her. that a lot of times, if it's okay with the client, I'll say, can I run this by my mom? And she can figure out what your tax benefit or savings will be, and then how to adjust your withholdings on your pay, your W-2, so then that way you can get back more money each month in your paycheck to offset the increase going from renting to buying, but yet still not owe any more at the end of the year. So she's done that for me, for some clients. I'll just say, can you take a look at this? I know, if I have her do that for 50 people, one time she might get mad at me.
Yeah,
but it's something that can be done.
Right, but that's the thing is that, I wrote this down. If we have answers, and if we don't have the answers, we know where to send you to get them. Yeah. Well, that's really exciting, because $28 an hour for 2 borrowers, 43% debt to income, that's exciting. That puts a lot of people within reach of buying a pretty nice home on the Long Island Peninsula.
Yeah, I think.
And what about the credit score?
Well, we have credit scores that go, depending now. There's so many different options. It's hard to give like a definite, specific. Like I have lenders that will do their underwriting on a case-by-case basis. So you actually don't even need a credit score for those lenders. But you'll have to have compensating factors like more money down, or there will have to be some good explanation for this.
So basically, it's kind of a makes sense lending.
Yes, yeah, which is very unusual. Most lenders you're either within their guidelines or you're not, and you just don't get qualified.
So would you say lending, since the crash and everything tightened up and it was impossible, would you say lending's loosened up a little bit? Is it easier for people to get a loan now than it was a few years ago?
Yes and no.
It should never be how it was.
It's definitely harder for sure than it was. There are some things that have loosened up a bit. It depends on the lender themselves. Each lender has what's called overlays, or not. It might be a lender who doesn't have overlays. Usually the lenders with the best interest rates are probably the most conservative. They're taking like the cream of the crop, and that's why they offer those interest rates. FHA is one of those loan programs that they're very lenient on credit scores, and they have awesome interest rates. Their rates are actually better than conventional loans right now.
Tell me about mortgage insurance.
Okay. Mortgage insurance, private mortgage insurance, that is a mortgage insurance policy that the client pays for that protects the lender if they default. And most people have heard if you put less than 20% down, you're going to pay mortgage insurance. That's not necessarily true. We can do a first loan at 80%, and then a second loan on top of that, and it avoids paying mortgage insurance. So we have a jumbo loan program where you can put 10% down up to $2 million. And the interest rates are right now in the low 4s. So it's really good. It's a really awesome program.
So you see, people, this shows you who you work with matters, experience matters, because somebody who understands and knows what all the different programs can put you into the best loan program to not only have your upfront costs be less, but overall, in the long term.
And I have no fees when it comes to me. I don't charge unless I'm a broker. I get paid by the lender. So and I have no application fee. I don't charge a credit report fee. So coming to me to get this information is completely free. And just to find out, if it's going to work for somebody, there's really no risk at all to doing so. And not only I'm not biased to one bank over another. I have no interest in sending my client to one bank over another.
It's what's best for them.
It's what's best for them, which not very many people can say. They are affiliated with one bank, or they get incentivized to. I know brokers who have to go in-house first, and if there's a better rate somewhere else, sorry, I have to go in-house. You're getting the rate that is with my in-house lender because I have to use them. I do not have that. I can go anywhere that I want. So my goal is to get the borrower into the program that's going to work for them with the best price lender, as opposed to getting them into any lender that works, regardless of what the rate is.
That's great.
So there's those two things that I'm always trying to accomplish.
So the basics. So Jessica has this lending cheat sheet. You can call, text her anytime with questions to start pre-approving people and agents. Jessica's amazing. I've known her since she was probably 12. Grew up with her parents, who are amazing people, great family. We both went to RLS.
Yeah,
Not,
or Stevenson, they call it.
At the same time, right. So let's see. So some of the program highlights. She has a guaranteed 21-day close for traditional purchases. 7-day close for private loans. They do private money loans at Riviera.
Yeah.
24 hours or less for pre-approvals.
Yeah.
And the pre-approval is different than a pre-qual.
Yeah, so that's the one where you're going to get your letter. I mean, I can give you a pre-qual letter.
But that doesn't matter.
But realtors are going to throw it in the garbage.
Right.
That doesn't carry any weight.
And for those of you who don't know, you cannot go and shop for a house without a pre-approval because nobody will take your offer seriously. So just know that.
I mean, you can.
You can, but your offer won't be accepted because you have to show that you can buy this house. You can't just give an offer without proving that you can actually close the deal. And then Jessica talked about the asset depletion loans.
So there's people who have a lot of money in the bank, but they might not have a ton of income. So what they'll do is we use a calculation to determine based on, how many years they have left. And they depleted those assets that they'll give you a certain amount of income per month to use to qualify for the loan. So it's great for, retirees who might not have a ton of income coming in, but they have a ton of money in the bank. We also do a bank statement loan
that's
program.
Great for self-employed.
So people who write off everything on their tax returns and their tax returns show that they're not making very much, we can just show bank statements to also, it's just an alternative way of calculating their income so that they can qualify. And then we talked about the 10% down. Yeah. That one's a good one.
Yeah.
Yeah.
And then you do commercial and apartment loans because we have a lot of investors here. I work with a lot of investors, so they do everything. And so
the big thing I think is the quick close. The quick close,
21-day close.
Because I was just speaking with another real estate agent who was just so fed up because and she, not to say a ton of bad things about the big banks, but she's just fed up. She's like, if I get another client from a big bank, she goes, I don't know what I'm going to do because they keep going over the contingency periods. And for people who don't know, contingency period is an agreed upon time frame that you and the seller negotiate to get your inspections done, get your loan in place, get all your paperwork finalized on that, and then usually you'll have a deposit, an earnest money deposit that goes. And
right.
You explain this, but so what happens is you say that you're going to
release contingencies in 17 days, and then or 21 days you'll have the appraisal done. The loan will be completely underwritten, and you're ready to go.
Yeah, and then you have
from
then until the end of your escrow to then sign your loan docs and get the funding taken care of and all that, and then you move in. Well, you've set the expectation, the seller's expectation.
And they're moving and they're buying something else.
Exactly. It's a domino.
It's a daisy chain.
Yeah. And if you don't meet those time frames,
people get mad.
They get upset. So, and it's not a situation anybody really wants to be in. We want to do what we say we're going to do. So, being as I say, the lending is like a game of hot potato. It's like move in as fast as we can to meet those deadlines. And if you are with a lender who cannot meet those deadlines, it's very problematic. Yeah. So we have two lenders in particular for most of the conventional FHA, VA type loans that are closing. I say 21 days, but they're actually saying even faster. But I'm giving myself just a little extra time. So that way, and also the borrowers, because the borrowers, sometimes it takes a minute for them to get the paperwork that they need, you know, so that is probably one of, and buyers don't really think about that, the timing of it all. They just hope that everything happens, but it's a huge issue on the professional side of things, you know, for the lenders and the real estate agents.
Right.
That's probably the number one complaint that I hear.
It is.
Is about closing on time.
So, I just want to tell everybody, so VA loans are great. The conforming limit is up to what, 575?
Yep.
You can get 100% financing with nothing down on some of those.
Yeah, and there's so many people that have the ability to do a VA loan, and they don't, which is crazy.
Because they don't understand.
Yeah.
They don't know they can.
Yeah.
So, and the USDA loans, those have property restrictions. Those are for like Prunedale, South County.
Yeah, and sometimes
rural areas.
I've been surprised though. There's some eligible USDA properties that aren't very rural.
And I'm like Carmel Valley or like Highway 68, any of those?
No, not Highway 68. And
Prunedale,
maybe
South County,
further out in Carmel Valley.
Kashawa, maybe.
I'd have to look. Yeah, I usually what happens is if somebody's in, because there's also income restrictions.
That's right.
So if the person is a viable candidate for that type of program, then I would look in to see if the property is eligible.
Non-USA citizens, that's another biggie.
Yeah. We have programs for people who are not U.S. citizens.
And because of what happened in 07, 08, 09, BK short sale foreclosure, most of people are coming out of that now.
Yeah, but it can be one day out, and we have programs for people that literally just finished their bankruptcy.
Awesome. Case-by-case lending with a credit union and traditional loan rates. There's private lending, so maybe you're doing a 1031 exchange and you need a private money loan short-term, right?
Yeah, usually private money, even though it would have to be somebody who like just doesn't qualify in the traditional realm.
Or unique property.
Their rate's in the 6%, so it's not too unaffordable. You know, it's something that's realistic. I mean, private loans in the 6s is pretty good. So those are going to be for the clients who like just didn't get in. They like barely missed the traditional loan program box. But for the private money, it can be costly. You know, those loans can be costly. So they want them to be short term. You know, and even though they'll do long term loans, it's always what's your exit plan, because nobody wants to pay more than they have to, and so
it's just if you really need it.
Exactly, yeah, and it come in handy, especially with subprime loans being pretty much eliminated. There's a need for that, and there's a market for that, but it definitely is something you don't want to have forever. Right. You know, it's serving a purpose for that time.
It's nice to have if you need it.
Exactly. So, yeah.
So Jessica Abushan. I'm going to give you her phone. I don't know if you guys can see this. I can put it up here. Let me go here so you can see if you can see this. I'll leave it there for a minute. And there's a link that you can. There's a hi Pierce, hi Rose. There's a link that you can click on with information to get information on loans. But Jessica's phone number direct is 831-901-0598. And you can email her at Jessica at ATmortgageadvisors.com, which I'll put a link in the comments with a link you can click on that'll take you right.
Or you can send me a message on Facebook.
Or you can send her, you can friend her on Facebook, Jessica Abushan, and send her a message on Facebook, or put something in the comments, and we will stalk you. We will find you. Anyway, this is something that we're going to do regularly to answer questions that the public wants to know about real estate in Monterey County. So please, contact us about anything that you want to know, because when people buy a house, it's not really just about the house. It's about lending. It's sometimes about lending. It's silly questions that you think are silly, but they're not, because we have the answers.
Yeah, there's no bad questions.
There's no bad questions, and even as far as about our town is unique too, because I tell people sometimes when they're moving here to just rent for a while, because you want to see where you want to live, like hang out in PG and hang out in Monterey, because they're very different.
Yeah.
And Santa Cruz is different, and you might like Salinas, and you might like Carmel Valley. Because I think this is a very unique place. I said that the other day too. It's very unique.
Yeah, no, I agree. So, I mean, I grew up in Pacific Grove, and then my parents bought a house out in San Bernardino when I was in high school, and I was like, oh my gosh, how come we didn't move out here years ago? It's beautiful, it's sunny, But then you're
far
away from everything. Yeah, you got to drive, to get you can't walk to Grove Market. You know, it's different.
Right. Like I grew up in Pebble Beach, and so we were always in Carmel Valley looking for the sun. And San Bernardino, you always have the sun. So people that move here, they don't understand we have different ecosystems.
Yeah. Well, my parents grew up here.
Right.
And they were saying the same thing. Like, God, how come we didn't move out here all the time?
I know. So.
And with me going to Stevenson, it was like you didn't have to be in a certain school district.
No.
So that didn't matter.
No.
But that's also a huge consideration for buying in one area over another as well. If you have children and you want to.
Yeah, there's determinations on school district too, where they want their children to go to school.
Yeah.
We have some great schools. We have great private schools. Also on my YouTube channel, there's some interviews with some of the superintendents of schools if you have interest in that. But yeah. So anyway, thank you for joining us. We look forward to serving your needs as far as home loans and buying houses and selling houses goes, and answering your questions. And we will see you soon.
Thanks, Leslie.
Bye. Thanks,
Bye.
Jessica.